Thank you for tuning in to ICT on PNC, a podcast covering issues that impact the Texas insurance industry. The Insurance Council of Texas is a nonprofit trade association serving the property and casualty insurance industry. We're proud to be the largest state-based insurance trade association in North America. Welcome to ICT on PNC.
Good afternoon. My name is Albert Betts, Insurance Council of Texas Executive Director. Thank you for joining us for today's ICT podcast. With me is a distinguished panel of insurance experts and lobbyists and ICT staff. I've got Jay Thompson of Thompson Co. Cousins and Irons. He's our general counsel, but also counsel for AFACT and a longtime insurance lobbyist, lawyer, expert, you name it in insurance in Texas. Jay has done it. Also with us is Shannon Maroney of Maroney Public Affairs. Shannon's also lobbies for AFACT and other groups over at the Texas Legislature. Shannon's well-known, well-versed, and will help us understand what's happening over at the Capitol in this session. And finally with me is Angie Cervantes, the Manager of Government and Legislative Affairs for ICT. Angie is our liaison to AFACT and has helped tremendously this session as we try to unravel what is happening in this 140-day meeting of the Texas Legislature. Today, we're going to talk, where are we? We're a little over midway through the session. We had our first podcast at the beginning of session, had these wonderful predictions about what would happen. As usual, we are completely, almost totally wrong. So I want to kind of catch up and talk with these folks today about where are we as the PNC industry during this session, what's happened, what has changed the direction of the session, and then as we wind down the second half of the session, what to expect and what are some key deadlines that are coming up that we need to be paying attention to. So we all know what happened in February here in Texas, record cold, record temperatures, but that has definitely changed the shape and tone and tenor of this legislative session. So opening up with that, I'm going to turn to Jay Thompson and just ask his comments on what happened with the storm, how that has changed this session, and then what the industry's response has been to the devastating winter storm event here in the state. Hi, Jay.
Hey, Albert, how you doing? I'm glad to be here today. And yeah, obviously the winter storm and the size of the loss to the insurance industry was not anticipated at all. It's going to be anticipated to be a very big loss. We normally cringe when we're going through the spring storm season with tornadoes and hail, but it was unprecedented in terms of the number of losses under the policy from frozen pipes, a lot of it due to the power outage. TDI has done a special call that they've asked companies to provide information to them on a weekly basis as a quick snapshot of claims that have been filed, paid, incurred. They wanted that on a weekly basis. We have not seen the results of that. We're now 3 weeks into the start of that. Have talked to the department staff. They are indicated that they were going to have a briefing with Chairman Hancock sometime this week with that data. There were some companies that had not filed it yet, but I think all of those hopefully got filed by Friday so TDI could assimilate that and report to that. And so I think that those issues we thought would be really overshadowing everything. And then in the last week, it has really started to pick up with hearings and a lot of bills and movement and moving away from ERCOT and that disaster to, well, people should get their money and get paid. So that's kind of the prevailing sentiment this week. Shannon, you may have some other takes on that too.
No, I think you hit the nail on the head, Jay. The winter storm really did take all the oxygen in the room for several weeks. And I think now some of those issues have been shaken out and are moving forward. And so they're having, I guess, what I would call ancillary effects on us, which is a broader view of just insurance claims generally and how the process works and how long it takes and when people get their money, because with any storm there is an influx of claims, and so that puts additional attention on us.
Yeah, y'all are right. Back on March 2nd, the industry got called over to the legislature for a hearing before House Insurance to lay out pre-storm planning, what was happening with claims, how the industry actually worked and responded to massive disasters like this. So definitely a shift. I think we'll all admit we learned more about ERCOT and PUC than we've ever heard before as they took front and center stage. But I think you're right, Shannon. After all that, its attention is turned to what is happening with the insurance industry and what's happening with Texans as they try to recover. And Angie, I recall TDI did issue at some point some bulletins that were not mandating any actions, but at least laid out some advisory or expectations from the agency. You want to briefly cover some high points of what TDI said it expected of the insurance community?
Yes, so they have frequently asked questions on their website, and one of the things that has been brought up during this particular storm was, do I have coverage if the power went out and I couldn't keep the house warm, as some policies might say? And so TDI did issue a bulletin just strongly suggesting that claims not be denied because of power. And then they also held a webinar where they took people's questions via email and again reiterated the same thing. And another big discussion that they've been having is fraud and what you can do as an insured to protect yourself from that. One of the things that they recommend is when you're picking a contractor, don't give them all the money up front, call your friends and get recommendations and things like that. So they have done their part.
Okay. And so, we'll await TDI's data call, see what those results are. I'm sure there may be more hearings and discussions on that. So outside of the storm, we then moved into what I'll call the routine P&Z issues that pop up every session. And one bill that's been particularly interesting, I want to start off with this one. It's an issue that came up back in, I think, January of 2020 during a windstorm hearing down in Rockport, Texas. And the issue of how does replacement cost work in insurance policies? And a lot of concerns or complaints, at least at that windstorm hearing, that replacement cost coverage didn't pay more money up front. And as we're all aware here, at least on this call, replacement cost pays your ACV value, and then there's subsequent payments. So we saw a bill filed this session. We knew it was coming, House Bill 1110, which attempted to, at least in its initial draft, change how replacement cost policies worked here in this state. There's been a couple of hearings on it, a lot of discussion, a lot of industry discussions, and some, at least attempts, Jay, correct me if I'm wrong, at least attempts to find something that could work for the industry, but also work at least for some legislators who had concerns about the process. Can you talk a bit about where are we on that bill and some of the concerns that were raised about the direction that bill is now taken?
Yeah, it started with testimony at the Rockport hearing of the House Insurance Committee, and Julie Johnson and some of the other members expressed concerns that people weren't getting enough payment up front and couldn't complete their repairs, and they had to borrow a lot of money to repair their houses, and it wasn't fair. When she filed a bill that simply required companies to pay, if they bought replacement costs, you had to pay the full amount up front. And we talked to her about problems with that approach, that we weren't aware of any other state that did that or required that. Florida tried that for a while. It was a disaster, resulted in a lot of increased cost for consumers, resulted in repairs not being completed. People got a lot of money, but and was not workable. We talked to her about different options, about maybe making it a mandatory offer to pay higher amounts up front instead of using ACV and depreciation. The independent agents came in with just a very simple bill that just said you had to pay 80% up front. And in the conversations with her and the stakeholder meetings with her, they admitted that they just pulled that out of the air. Well, she took that and drafted a substitute and restricted it to homeowners, condo owners, and tenant policies. But for contents and for the dwelling, you have to pay 80% if you've got replacement costs. The testimony
Jay.
at the hearing, one of the members of the committee is a contractor. He says he asked for 30% up front and then 30% when you get halfway done. And then at the end of his discussion during questioning, he said, but I think they ought to pay 90%. And where that came from, we're not sure. We went back to try to maybe soften this because it was apparent she was not going to do the offer approach, and tried to suggest language that would require insurers to pay the greater of 50% of the estimated cost of repairs or the actual cash value less depreciation, less deductible. And we gave that to Chairman Oliverson. He did not do anything with it. We also added a provision that right now companies are restricted on their ability to do premium surcharges. If there's a claim that's been made from a natural event, they can't non-renew risk, they can't cancel risk. And we suggested some language that would allow companies, if they haven't completed the repairs and they got that much money up front, that the company ought to be able to get off the risk or have a premium surcharge. That is not in the substitute bill, and it was voted out last night by a vote of 7-2, with the chairman voting for it. And so that bill is on its way to the calendars committee. And I think that is going to be hard to stop in the House. And we'll have to continue our efforts and discussion with calendars committee and then in the Senate.
Okay, Jay. Yeah, a little bit later, we're going to generally talk about what happens after bills get out of committee, because it's an interesting process. There's a lot of things that still have to happen before something becomes law. There's some deadlines coming up, as you're well aware, that may affect what survives or what dies or what becomes an amendment elsewhere. Shannon, the commercial bills that are out there, let's talk about a couple of those real quick. Commercial trucking litigation bill is what I'm calling it, but House Bill 19. That started, I know I watched the first hearing of it, and it was clear, a lot of discussion, a lot of opposition, a lot of pro folks for it as well. And it was interesting to watch the lawyers go back and forth on it because it's about litigation. So you saw both defense counsel and plaintiffs' lawyers both complaining about various aspects of the bill, almost not quite holding hands in unison, but close. Talk about where that bill heads next, and I'm assuming everybody listening is aware that's an attempt to try to address the runaway litigation that's happened in the commercial trucking lines. But if you watch TV or lawyer ads, you can probably figure out there's something happening with commercial trucking, because there's an ad every 10 minutes with sue your trucker, sue that company, and I'm your lawyer. So talk to us a bit about where that bill is, where it's headed next. As I understand it, it did go out of committee, but tell us what's going on with that.
It did. It looks like Senate Bill 17 is the one that's going to move, I think. And as you say, or I'm sorry, House Bill 19, sorry. But I thought it was a real interesting hearing that there was much more kumbaya in the room than I've ever heard before between folks like TLR, and president of the Texas Trial Lawyers Association, which typically that do not get along well and are on the opposite sides of each other from things. And I actually went to law school with Jim Purdue Jr., I should say, who's the current president of the Trial Lawyers Association, and who's a good friend and a real good guy. But also the son of one of the best trial lawyers in the state of Texas. So he has been steeped in tradition from a very young age. But he was happy to be there, complimentary of the conversation that they'd been having and able to have and all the agreement they were able to reach. And so I thought that was, really more promising than anything else I've seen of this type of a bill before. But so, yeah, they did pass it out of the committee about a week ago, I think, yeah, the 24th. And so from there, they did do a committee sub that got passed out. And so it will head to the floor now, since it's been through the Judiciary and Civil Jurisprudence Committee. It'll go to the House floor, and I'm sure that we will see a pretty good amount of new debate there, because this, like you said, this is an issue that's getting a lot of publicity, a lot of media. And, so far only the people on the committee have been able to weigh in. So when you have an issue like that goes to the floor, you're going to have a lot of other folks that also want to be on record as saying a lot of things. So I would expect that we will see quite a bit of conversation on the floor when this goes to the House, probably more so than anywhere else. And I think we can expect that to happen in the next, week or two for sure before it moves over to the Senate side.
Okay, great. Obviously something our members are keenly interested in, given the implications for the insurance market. So thank you, Shannon. Jay, I want to go back. I forgot one bill. I'll call it an outgrowth of the winter storms. I think it's House Bill 3250, the expanded, what I'm calling the expanded ALE bill. Talk a bit about that. I know that was heard yesterday. Apparently there was a committee substitute, but and I haven't seen it. Your thoughts on some efforts to try to expand the availability or coverage for additional living expenses?
Yeah, the bill is filed. It would have just required companies to cover additional living expenses anytime a structure was uninhabitable because of lack of water or lack of electricity or gas. And last night, Representative Thompson, who's no relation to me, is a State Farm agent. I want to make sure that's clear. Explained that his substitute was not intended to just be blanket deal. It had to be, the inhabitability had to be the result of a covered loss. We haven't seen the actual substitute. There was some discussion on the committee, like if it's flooding that's caused that, that's not a covered loss, so you wouldn't get that. But it appears to me that it is aimed at the lack of electricity or water or things, if that they are unavailable because of a covered loss in a very broad sense. I think what companies look at is, did it happen to your house? Did you have a windstorm? Did you have a hail that storm or covered, or a fire that's covered that caused this? Or was it ancillary somewhere in the neighborhood that you're out and then you get ALE? And I think it was the latter that did that. So that bill will probably be voted on next week. I don't anticipate that there will be votes to stop it in the committee. So that substitute will probably get voted out next week.
Okay. And Jay, I want to thank you for clearing up that no relation there, because I had a theory that was your actual alter ego filing these bills just to give yourself a little extra work on the side. So
yeah, no, Thompson's a very common name. I'd love to be related to Miss Thompson. I think she's a very fine person, but we're not related either. So,
okay, thank you, Jay. Let's talk about TWIA. Had been kind of slow on TWIA until recently. Yesterday was TWIA Day in house insurance. So multiple bills discussed, rates, TWIA board composition, the rate process, administration of TWIA, reinsurance. You were there, and I watched it. Angie watched it, and so I'm gonna, start off with Jay's commentary on it, and then Angie, get your thoughts as well on what you witnessed or heard during that meeting. Keeping in mind this is a family show, so please keep it clean. So with that, Jay, kind of talk about some of the big issues that were discussed yesterday, and your impressions of some of the comments as well as the committee's take on what they heard.
Well, Chairman Hunter started out with his two bills on rates, and his level of rhetoric is very much very emotional. He's admitted that it's a very emotional issue within his district. He was quite emotional and felt disrespected that they had written letters asking the board not to raise rates, and they recommended raising rates. So his first bill, House Bill 3809, was the first one up. And what this bill does, he represented that this was to take the politics out of it and let the TDI determine what the rates are by rule. And fairly straightforward, except there's the devil in the details. They can only do that once every 5 years. And the process of doing it by rule is not very well laid out in the bill. He also deletes all of the rate standards that typically apply to insurance companies, like a rate can't be excessive, unfairly discriminatory, or inadequate. Those are all deleted and replaced with a standard that the rates must be reasonable to the public. The industry groups, TCASE and APCIA, testified against the bill, even though APCIA said that they supported the concept of letting TWIA rates be determined by the department. I testified neutral on the bill, similar to that if they can do, TDI certainly has a long history of being able to do that, and doing it through rulemaking may be a less expensive and less timely process if they did it that way. Suggested that they keep the rate standards in there and not do a 5-year period on changes in rates because of the changes in cost of what insurance pays for that can happen very rapidly over time. As, for example, the cost of building materials or labor may change dramatically if things are not available. That bill was left pending, and then the next bill up was his bill that would just simply keep the law like it is, but require a 2/3 vote on any rate increase. And chastising the insurance company members of the board and saying you've always got to get a 2/3 vote. It's always interesting that Chairman Hunter also lobbies very hard to get a realtor or a banker put on there, and then puts a considerable amount of pressure for them as a non-coastal member of that board to vote with the coast on those issues. And there were bankers and other groups there last night testifying in support of both of those bills, along with the coastal people.
And Jay, am I right on that 2/3 vote bill, 3810, that only applied to rates? So any
Right.
other TWIA decision, reinsurance, budget, raising limits of liability, any of those, which in my mind impact TWIA much greater in terms of their financial position, those are not subject, would not be subject to that 2/3 vote.
That's correct. Yeah.
Okay.
And,
Any clue? I don't remember hearing it. Any reason why it was limited to just rates, or could anybody testify as to why such a narrow focus?
I think, Hunter's, since his focus has been on rates since he first ran for office in 1988. And he told me before the hearing that his focus was on rates. I discussed some of our concerns on other issues in other bills. And he said, well, I'm concerned with rates. We can talk about that. But that's his sole focus on his legislation. And he's going to be pushing on that because he wants to avoid any type of rate increase, because under the current law, the board is required to make a recommendation and file rates on or before August 15th of every year. So if a bill does not pass, there's going to have to be a meeting of the board and a vote on what they're going to do for rates in August. And I would expect more of the same as long as it rests with the board on that. So he'll be pushing hard on that. I don't know how much traction that's going to get in the Senate. There's not a Senate companion. Chairman Hancock has said in the past that he's not going to spend a lot of time on bills that don't have a Senate companion where there can be a hearing. And so if that bill, if anything happens, I would anticipate that maybe 3809 gets voted out. Well, they may both get voted out next week. He may have enough clout to get both of his bills voted out and just send them over there and let the Senate decide which one they like better.
Okay.
That would not surprise me at all.
Well, but he
to see
made,
that happen.
Jay, he
Say
made
that
that comment at the end where he asked, them to look at both bills. It sounded to me like he was asking them to decide which one that they liked better and move one forward.
Yeah.
But I think you're right. I could see them passing both out, but he kind of gave them the directive, I thought, to just choose a path and
Yeah.
make it move forward, which would be great for us to just have one to focus on.
Right. And we may go back to him and suggest amendments that keeps the traditional rate standards in the law. If he wants reasonable to the public to be added to that, my inclination would be to discuss that with our members and see if they would support that. I think I testified that I think that's a two-edged sword. I could argue that either direction because the rates in TWIA impact more than just TWIA. It can have a negative potential impact on non-TWIA policyholders in the coast because if rates are inadequate, they are more likely to be subject to surcharges. And it also impacts non-TWIA policyholders outside the coast because it increases the likelihood and probability of an assessment that's going to be passed on to them. That's part of what I said to the committee last night. I'm not sure. It's hard to tell how much is being understood by the committee on this at all. It seems like there's so much noise around this that the only takeaway may be that they know there's a problem and they don't seem to be focused in on much of the details of this other than that it's noisy. Maybe we need to do something. Angie, you've been an observer of this. What was your impression of that?
TWIA, well, I think a lot of it has to do with the same underlying issue that has permeated TWIA, I think, for a long time. And that's that it's this quasi-state, I guess we don't even want to call it a quasi-state agency, right? Because it's acting like an insurer, but then when you heard the discussion in the committee, it really does seem like they wanted it to act more like a state agency where you have the oversight and but it's not really. And then the concept of it's an insurer of last resort, but we talk about trying to keep rates down when the private market does write the majority of the coast. And so when you have the majority, the private market writing the majority and those rates being higher, TWIA is really not set up to go to TWIA because it's the cheapest. So just everything down to how you buy reinsurance, and since it's not an insurer, the discussion that it should be treated differently, and maybe you could add more on that, Jay, too. Though that was
Yeah, I mean, the House Bill 769 by Middleton really got into that, and their focus there was that the 1 in 100 TWIA is buying too much reinsurance and having to pay too much for their reinsurance. And then they got off on that the fact that the broker is running the models to determine what the 1 in 100 in is a direct conflict of interest. And I was surprised to see Scott Sanford kind of pick up on that argument and stuff. They've been really attacking the amount of reinsurance and saying we're buying too much, we don't need that much reinsurance. When the truth of the matter is, buying only 1 in 100 would increase the likelihood that TWIA, if they get hit by a large enough storm, they basically will not be able to pay for it all. So that seems to be lost on the leadership and on the people that are doing it. They're focused only on we don't want to pay any more for it, and let's shift the cost to the private industry. Middleton's bill, which we reacted very strongly to, basically requires insurers to pay to pick up all the reinsurance through additional assessments or just obligations. So in addition to the $1 billion, they have to provide reinsurance for anywhere from a 2 to 2.4 billion more dollars. That's nearly 3.5 billion, nearly 30% of the entire property market. And we talked about how devastating that would be to the property market if that happened. Middleton used that as an opportunity also to attack the board and use some forged emails that were used in one of the rate hearings in Corpus that were shown to be forged, and then they tried to trot it out again at the Rockport hearing, and then he trotted it out again last night. It's almost unprecedented to me to see the continued use of just false type information to try to better their position on particular legislation. So those bills were left pending. Middleton is a member of the committee, and I know that next week they'll probably be talking about what they're going to vote on and vote out. And I know the industry groups will be talking to the chairman to alert him to some of the false information that was provided by some of the witnesses and through those forgeries to see what he wants to do and will do with that to see if we can slow those bills down. Albert, there was another bill Middleton filed on dispute resolution, but it was not heard last week, is not scheduled to be heard this next week. The only bill that's going to be heard this next week is by Herrero, that basically makes all the board members have to be from the coast and stuff. So I think that's why it's important that that he knows before that bill is heard that there's just been some false information being used to denigrate the board members on TWIA.
Yeah, as you recount all that with TWIA, y'all talked about it. I'm reminded of a couple things I've talked about before. When I was at TDI, TWIA was an issue, and that was back in the early 2000s, late 1990s. I think when I joined Thompson Co., I think in 2008, 2009, your comment to me was, you've been working on TWIA however many years and will retire, and TWIA will still be going, and likely whenever I retire, TWIA will still be going. So I'm going to pass it along to Angie now and say, when I retire, and at some point, Angie, when you get into your retirement, which is a long way away, TWIA may still be an issue. It's always an interesting thing to watch and see how it goes and how it flows. But
I think that Jay said yesterday, or he says it, that you can't get rid of it once you've been exposed to it once. It is your issue forever, and I can vouch for that.
I'm sorry, we didn't. I tried to warn you when we hired you that there's a 4-letter word we talk about a lot, and you're about to get exposed to it. And I know you had some exposure over in the Senate, but
when Albert asked you, Angie, did you know something about TWIA, and you answered yes, then your fate was sealed.
All right. Well, I think there's probably enough about TWIA. Let's talk a couple of auto issues. But I'm going to just generally describe them. There's a couple of bills out there on how auto repairs are done and the role that insurers can play in making decisions about repair parts or which parts can be used or have to be used in auto repairs. House Bill 1131 and Senate Bill 1538. Somewhat of a repeat from last session, the last 2 sessions, as I recall, Jay. Kind of talk about what those bills are trying to do, and I don't think either one has been up for a hearing yet. I haven't noticed them, but where are we on those bills?
Well, there's been some communication with the members that have filed those bills. It's troublesome that we've got both a Senate bill and a House bill. Menendez has filed one, and there's a little bit different take on a couple of these bills. Albert, Clardy bills were the ones that were so bad and so onerous last year. This year, the auto dealers have tried a little bit different tack by requiring that repairs use OEM parts as long as a car is under warranty, and implying that if you don't use OEM parts, that is going to vacate the warranty on a newer vehicle. And it's our information. We've been looking and stuff that is not necessarily true. It's a bit misleading. It's almost like when Mark Twain used to say that, a lie can get halfway around the world before truth can get its pants on. And so some of the stories on these bills are already in Slovenia while we're trying to get together on it. And those have not been set for hearing, but I know that the national trades are putting together some good information, and that we are talking behind the scenes. Hopefully it's going to be at least 2 weeks before there'll be a hearing on the auto bills on these repair shops. And I think the chairman understands the problems with those bills. We've talked to him early and often on those, and hopefully he understands that, and that may explain in part why there's been some delays on that.
Okay. And the other auto bills deal with communicating with the insureds and a third-party claim, and there's a House and Senate. They both take a little bit different tact. But House Bill 2330 and Senate Bill 1602. I want to talk about what those are attempting to do and the different approaches each one took, at least as filed.
I think one of those is a Kraus bill that requires if a third party sends a notice to the insurer or the third party, they have to give them their coverage. Then the insurance company has to file a sworn statement on why it's not covered or what is covered, and then update that. That was a bill that was filed last year by Kraus. He's
Right.
a Republican on Judiciary Committee. Florida has a law that's not quite as onerous as that, but does require disclosure of policies before a lawsuit's filed. Texas law is pretty clear that once you file a suit, if there's insurance on it, you disclose the policy at that time, but there's no affirmative obligation on the part of the insurer to say, well, this is not covered in this if you plead it this way or not. It's an unprecedented approach, and I think he has a plaintiff's lawyer in his district that's pushing for this.
Okay.
But I don't think those bills I hope they don't get serious consideration this session, because they would go against the flow of trying to provide a stable litigation environment or a fair litigation environment. It would really shift the balance significantly if either one of those bills passed.
Okay. And I think Senator Taylor has a bill that, not the same, but deals with an insured who doesn't respond in a third-party claim, doesn't respond to efforts by their insurer to get information that the insured could, correct me if I'm wrong, the insured could actually cancel the policy.
That's correct. And,
Taylor's version.
Yeah, the House Bill 2330 by Thompson is a bill that the Senate Bill 1602 by Taylor. If the insured doesn't cooperate or won't communicate after there's a claim, then it requires the insurance company to cancel the policy. And there have been some insurers that, and I think it's really both bodily injury and property damage cases where they say, look, we don't have any coverage in this claim because we can't get a hold of our insured or they won't cooperate. And Senate Bill 1602 requires a company to cancel it. 2330 was even broader. It required the company to contact the insured 5 times, and if they didn't, then they had to go ahead and pay the claim.
Right.
And it's my understanding that he's been approached about amending that bill to mirror Senate Bill 1602. But neither of those bills has been set for hearing yet. Probably will be the House bill first, and the Senate probably won't consider that unless it passes the House and gets over there, and then they may pick it up. on that. So
Okay.
that's the status of those bills.
Great. Thank you, Jay. And Shannon, I'm going to turn to you for our last set of bills. What we're referring to as the privacy bills. There's a group of bills out there restricting access to either state government information or motor vehicle information, both in the Senate and in the House. So just kind of talk about where those bills are. I'll try to rattle off all the numbers. I'm probably going to miss a bill. Senate Bill 15, Senate Bill 16, Senate Bill 1010. I think there's some House versions out there as well. But generally, what's happening with those bills, and why is the industry paying attention?
Well, on one of them, we had some concerns. The one that's Senator Nichols is carrying, and we had some concerns for the industry originally because it was going to restrict our ability to pull even like motor vehicle records from the agency, and that's something that happens pretty frequently in the auto business. So we went and spoke with them or with his staffer, and they were very amenable. I think LexisNexis had already checked in with them, and they were very amenable to working with us. This is Senate Bill 15 is which bill that was on. They said they'd already, heard from LexisNexis, understood the concern, were fixing it for us. So I think we're going to be okay on that bill at least. It's been heard and today actually, and was left pending. But I think it's in a pretty good place. The bigger one is the bigger privacy bill, I guess I would say, is the one that Gio Capriglione in the House has been working on for years now. He's kind of been the head privacy officer in the House, I guess we can call him. And word has it that he has so many stakeholders that are interested in that bill that they've had to schedule 2 days of stakeholder meetings. And we're having to do most of this off-site, of course, because you can't gather that many people together in the Capitol under their protocol rules. So those meetings are happening off-site at the Austin Club on 2 different days. And one of them is today, I believe, and the other one is, one of them is today at 1 o'clock and the other one's tomorrow. So, I think there'll be obviously a lot of conversation about those bills, and we'll don't really know. I wish I could tell you more inside intel on them right now, but before those stakeholder meetings happen, I think, it's probably premature to speculate on what's going on with that. But, it is definitely a concern because we want to balance people's privacy rights with the ability to pull records that we've always been able to pull to get information that has actuarial value to us. And so it's the intersection of those things that becomes difficult to manage, I think, when we talk about privacy legislation. So, we'll see what happens with that. And I believe, I wanted to double check it before I said this, but I believe Senate Bill 16, which is the other one on that bill, has not been, on that issue, has not been heard yet. And that's a Senator Nelson bill. So still waiting to be discussed.
Okay. All right. Yeah, I know I was sessions starting, all these bills popped up generally around this issue of privacy and restricting access and trying to figure out what was going on. But yeah, keep us posted. It's garnering a lot of attention. I know we're hearing from members about it, even some of our associate members who deal with data and auto information. So thank you so much. So by my count, we are close to wrapping up. This is day 78 of sessions, and we're almost down to 60 days left. And I'll ask you all to chime in. So where are we and what happens next? I know Angie and I were talking about starting to look at the calendar because there's deadlines that are coming up in the next few weeks, next 2 to 3 weeks by my recollection. But where are we and what should we, what's our milestone at this point? 60 days was bill filing deadline. what should we be worried about or keeping an eye out for in the next couple of weeks?
Well, I'll start. The bills being heard, they have to be referred, then they have to be heard, and then they have to be voted out of committee. And after they're voted out of committee, there can still be a delay because until they are reported to the calendars committee, then they're not in calendars and can't be set in calendars. So bills that have been voted out still have to be reported and then go to calendars, and will have to be on a calendar and in calendars committee, I think sometime in the last week of April. A bill's going to have to be reported out and on a calendar in the House to have any chance of going anywhere.
I think it's May 10th that it's the last day that House committees can report House bills.
Okay, so that and you'll have to back up from there because bills will still be heard and reported, and then you're going to have all the committees that are reporting bills. There's going to be a flood of bills that are coming out. If they've been challenged or opposition, they would have to go to the regular calendar. Then they'll have some local calendars that will be a little later for uncontested bills, which will allow them a little bit more time to get out. Now, the Senate can move a lot faster because they can suspend the rules and get a bill out and up on the calendar. The calendars committee in the Senate is the lieutenant governor. So even though it may be on an intent calendar, it's up to him to recognize a senator to get a bill up and out. And there becomes a logjam in the Senate too. So we've got 30 hard days now of hearings and amendments to bills, committee substitutes, and then bills that do get out and get on the calendar. There'll be some members that will want to stick some of their dead bills onto another bill or onto a Senate bill in particular to see if they can give it some life. So this can get pretty traumatic and hectic the last 60 days.
Yeah, I would. April is really the month where we start to see things get frantic and crazy. And just for the reasons that Jay just described, a lot of deadlines start happening in May. And so if you don't get your hurdles cleared in April, you're already dead in the water. So it's a time where we're going to see a lot of funny business, I think. And I'm hopeful that, the Senate has engaged in some pretty historic funny business already this session having to do with the winter storm bills. I think under Lieutenant Governor Patrick's direction of just wanting to take authoritative action quickly and be the House or be the chamber that was doing that. So they've literally suspended every single rule they've ever had to, get a bill heard by committee before anybody even read it and then voted out that day and back to the floor. And I mean, it has been pretty astounding, the hurdles that they've found a way to jump over. So I'm hopeful that those kinds of exceptions are only going to happen to those kinds of emergency issues, and they're not going to bleed over into our regular old everyday issues. But it's a different, as they say, an unprecedented session, and you never know what's coming next.
All right. Well, thank you. And Angie, you've actually lived the life of a staffer over in a committee during this time of year. You want to share any wonderful stories about the time you spent working session the last few weeks?
Yeah, I can't get into too many details or somebody might come out and get me. But no, I think that we're getting into the time where if you are trying to pass bills, you start to get frantic. You need to get on that House, or especially in the House, get it heard by committee, because it's really the paperwork that slows it down. And if you're on the defense this session, I think it's a little bit more, okay, come on, time, let's pass. And then and Shannon, you might have more insight on this. It seems like they're not hearing as many bills. Do you anticipate there's going to be more floor action, amendments, looking out for things trying to be stuck on other bills?
I do think we're going to see that. Yeah, because especially on the Senate side, we just haven't seen very many bills heard on anything other than emergency issues. So, yeah, I do think we're going to start seeing some amendments and Christmas trees, as we call them, gather more ornaments as the process goes on, because they're just, there's just not enough time and enough hearing ability to get through the process the traditional way. So I think that's a great concern that we need to be watching for.
All right. I appreciate the forewarning. The next month is going to be interesting, and we may quickly try to reconvene in May when we have a better sense of what's alive, what's not alive, and what's on life support, and kind of talk about what survived so far. But I thank y'all for the insight and sharing your words of wisdom, and appreciate you taking time. And I hope you all enjoyed it, and we'll do this again soon.
Thank you for listening to this edition of ICT on PNC. Find us online at insurancecouncil.org for more information about our organization or about the property and casualty insurance industry in Texas.